You guys know how I love the ATR for targeting and stop losses. But what about entries? That's what I'm going to talk about today. Hi, this is Tim from TradingStrategyGuides.com. As I mentioned on Friday, you awesome people hit the goal for last week's video. Casey is working on the details of the option strategy right now so you can take full advantage of our stock trading strategies even if you don't have a $10 gazillion account. Look for it later this week. I've had a few comments from subscribers about trading binary options. I haven't looked at them for some time, but perhaps it's time for me to see if they're any better for trading than they were a few years ago. Look in the upper right-hand corner of the video for a link to a poll I'm posting to see who's interested in binary options. Also, if you have a strategy for binaries, post it in the comments below. Remember, the next couple of weeks are huge holiday weeks and trading is sparse and can be whippy, so be sure to protect your trades. In the past, when I was trading on short-term charts, I made it a point to go on vacation between Christmas and New Year's. Every time I tried to trade during that week, I ended up losing. So I decided that instead of losing the money in the market, I would blow it on a family vacation. It was far more satisfying. Today I'm going to have a brief discussion of how I use the average true range, or ATR, for trade entries. After that, I've got another Forex setup for you, a bear flag on the New Zealand dollar, Canadian dollar. I'll show you that shortly. But first, we don't have as many charts today as we have the last few videos, but we'll get on them. Then later on, the trading maxim for today. Happy Monday, guys! Do remember to click the subscribe button and hit that bell so you don't miss any of these great option strategies coming up. It's charting time. The US dollar Mexican peso weekly setup is still moving right along. Looks like we got a little push down today right here. This could take a while since it's actually a weekly signal. As I mentioned Friday, we got our close below the bear flag on the Euro Swissy right here, but on 82% volume. So I entered this half size. My entry was at 108,955-ish. My stop loss is roughly 109.60, and my first target 108.52. Okay, I'll show you the New Zealand dollar, Canadian dollar setup shortly, but let me tell you about ATR entries first. Do I use the average true range for entries? Well, sort of. I actually use it more pre-entry. To be sure we're all on the same page, the average true range, or ATR for short, is a measure of volatility. What is volatility? Well, volatility is simply the amount the price of a market moves around. A highly volatile market, the Great British Pound Australian dollar, for example, moves in huge jumps. You can expect the pound Aussie to move as much as a few hundred pips in a single day. You can make a lot of money on a big mover like the pound Aussie. You can just as quickly lose a bunch of money on it. The Euro Swiss franc, however, is a very low volatility market. If you get 50 pips in a day's movement, you've had a big day. How do I know these things? By looking at the ATR. The ATR is simply an average of the length of the last N candles. I use 14 candles for my N, which is roughly 3 weeks of price data for most markets. That will give us an idea of whether the market is in compression or expansion. As I've said in prior videos, the ATR automatically adjusts for time frame, market, and market compression or expansion, so it's useful for everything, including determining a valid stop loss or target, and also determining how active a market happens to be. And if you've watched any of my videos, you probably already know I use the ATR for entries. I look for a decline in volatility during the course of a pattern of consolidation to gauge the compression that's taking place in the market during that consolidation. The market is like a spring. The more you compress it, the more power it generates when the compression is released. A decline in the ATR during the consolidation means a bigger explosion on the breakout from the consolidation. All right, if you have any questions, post them in the comments and I'll be glad to cover them for you. Time to take a look at the Kiwi Loonie trade setup. Here's a daily chart of the New Zealand dollar, Canadian dollar, or Kiwi Loonie Forex pair with a really nice bear flag. A bear flag consists of an incoming trend with an upward moving parallel price channel. This is typically a continuation pattern, so we anticipate it to break in the direction of the original downtrend. As you know, I like to see a decline in volume and volatility to confirm the pattern. Remember, these things don't have to be perfect. There was obviously a volume spike on this day right here, but the volume continued to decline afterward. I only trade a bear flag in the downward direction. And here's the trade plan. We'll sell a daily candle close below the bear flag. On the breaking candle, we want to see the volume bar reach the volume average right here. If it doesn't quite reach the average but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage of the volume here by dividing this volume number by this volume average. Your result should be at least 0.75. If you don't get 0.75, I would stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say this breaks right here and we get a candle close right here. That will be the trade entry. On that day, you want to look down here at the ATR, multiply that by 1.5, measure that distance above your entry. That will be your stop loss. Measure 1 ATR below your entry, and that will be your first target. If after entering the trade we get a candle close back inside the bear flag, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the bear flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will have only a stop loss associated with it, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on the New Zealand dollar, Canadian dollar. Remember, this is a huge holiday week that is typified by low volume and high whippiness. Be sure to follow the rule of not taking a trade if you don't get at least 75% of the average volume. Also, remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 32. There are as many profitable trading styles as there are profitable traders. I know you've heard me say that what I do may not work for you. This is the maxim behind that thought. Trading styles are as individual as people. Many times a friend will tell you, well, I'm going to take Bitcoin short right here. And you look at the chart and your strategy tells you that Bitcoin is a buy. Are you right or is your friend right? All right, I'm going to be controversial again. You know I like to do that. I'm going to say you're both right. Yes, your friend's strategy says short, but do you know what his target is? Perhaps he's looking shorter term than you are, and his trade can fit inside the warm-up of your trade, or vice versa. Your friend's trade may hit his target while you're waiting for your trade to set up, or maybe you allow the price to swing a bit more than he does. Or maybe your trade will hit the target and his will stop out. Who knows? But just because you choose different directions, that doesn't mean that one of you is right and the other one is wrong. They could both be wrong, or right. The truth is, no one knows exactly what the market is going to do in the next 5 minutes, 5 hours, or 5 days. And I said all that to say this. You can copy my style for now, while you're learning, if that's what you want to do, But as you develop as a trader, you'll find things that I do may make you uncomfortable. Or you may be willing to be more edgy than I am. Just be sure to test, and gain confidence in your strategy so you don't give up on it just as it's about to make you a few nice profitable trades. I got some comments this past week about people being uncomfortable with some of the strategies that I've showed you. That's okay. I get it. I've followed traders myself whose strategies seemed wacky to me, but they made money with them. That doesn't mean I'm going to jump on the bandwagon. Remember what I said in Friday's video about bandwagons, right? My kids say it this way: you do you, boo. Find what works for you and do the heck out of it. That's how you'll become successful. Remember our daily Kiwi Canadian dollar trade plan here. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Please don't forget to comment below about binary option strategies. And if you didn't complete the poll above, pop back up there and give us your answers. Remember to be careful trading during the next couple of weeks. It's going to be a jungle out there. And have a great Christmas or whatever holiday you celebrate. I'm going to get to hang out with my kids and their kids this week. It's going to be a blast. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great holiday week, and I'll see you next time.